very methodical at draining the world's exchanges. And this is a massive position. They're going to stand for delivery? I bet they do, slowly. Anyways, the point of it is that you're seeing a massive drawdown at the very top. The LBMA, the ETFs, the Shanghai Gold Exchange, and the COMEX.
Join us today with Andy Schectman, expert analysis in precious metals and CEO of Miles Franklin. With a keen eye, he proclaims, this is prime time for silver and gold. Silver's undervalued independence shines through, while gold's reevaluation takes center stage. Andy's advice? Navigate with caution, favoring the flexibility of the 1/10 ounce gold coin. In the world of precious metals, Andy's wisdom lights the way. So don't skip the video and don't go anywhere. Keep watching till the end.
This is a risk that's not going away. You have the national debt that, since they raised the debt ceiling, is up $1.8 trillion since the debt ceiling crisis. And it took 209 years to add the first 1.8 trillion in debt. And 8 weeks after that, we've added another 1.8 trillion. It's ridiculous. It's unsustainable. And you know, with $32.6 trillion debt and the unfunded liabilities in Social Security and Medicare and Medicaid and whatnot, you're close to $200 trillion. And, you know, by 2040, 100% of all taxes by 2040 will go just to pay the entitlements and the interest expense. This is a path that is not sustainable. And you know, I think it's interesting when you look at what happened with the Bank of Japan, as you mentioned. This is a country that had been applying yield curve control to keep rates, you know, in a pattern by buying bonds. And as it is, the Bank of Japan owns the majority of all the bonds. Well, they said they're going to back away from that, kind of like, you know, we said we were going to normalize our balance sheet, and kind of like the United Kingdom tried to do the same thing. What happened there? Their pension market blew up. They had to, the bank had to come in, Bank of England, and go back to buying bonds again. Well, Japan did the exact same thing. They were talking about normalizing their balance sheet, and here just a couple days after, they had to come in with a $2.1 billion emergency bond buying operation just 48 hours after backing away or trying to normalize their balance sheet. And this is inevitable for all central banks that manipulate through what they call quantitative easing or counterfeiting. And the distortions that it creates, the distortions and misallocations in resources and capital create an environment where these assets have gotten so overvalued and inflated and distorted that by trying to normalize the balance sheet, you create way, way, way too many problems. So yeah, what's going on here at home is it certainly needs to be brought into the equation. It's something that I talked a lot about in the presentation on a broader sense about all of the things that I think our foes are not ignoring. You know, largely things like our obsession with a cancel culture and things like censoring and you know, the weaponizing of perhaps of the Justice Department and the FBI and the issues around the election, and are people being treated fairly under the law, and these whistleblowers that are coming out and pointing to all of this corruption. Well, that's not lost on the people who are de-dollarizing. And I think a lot of people are wondering, you know, is this the America that we all remember or talked about or read about or aspired to be like? And these are all things that are accelerating this ultimate de-dollarization. Very methodical at draining the world's exchanges. And this is a massive position. Are they going to stand for delivery? I bet they do, slowly. Anyways, the point of it is that you're seeing a massive drawdown at the very top. The LBMA, the ETFs, the Shanghai Gold Exchange, and the COMEX. This is the epicenter of where all the supply comes from. So does it ultimately have an effect on this industry? Of course it does, especially when something happens in the banks. Maybe they get bailed in or whatever it is that triggers things. It'll have an immediate effect. I say that to you because the ironic thing about all of this, in the middle of the eye of the hurricane, when all of the supply at the top is being drained, when the biggest money in the world, the others, which are the sovereign wealth funds and the family offices, the central banks, are on record buying spree, using suppression of price to run cover for what they're doing. But what is betraying the suppression of the price is the bleed down in the exchanges, where just the other day, by the way, and I know you asked me a specific question, I'm going to get to the other question, but even looking at things like GLD and SLV, last week, 200,000 ounces of gold came out of GLD. Where the hell did it go? And in silver, 1.5 million ounces of silver came out of SLV. Where did it go? Ted Butler said it looked much like metal being sent to places of more urgent need as opposed to plain vanilla liquidation by investors. It's exactly what it is. It runs cover for acquisition. That's what big money is doing. Is it going to India? Is it going to China? Is it going to Saudi Arabia? Who knows? But anyways, the point of it is that everything is on sale. These are the best prices and the best availability I've seen in 4 years. Is the world all of a sudden better? Is everything behind us? Is it green shoots and prosperity ahead of us? Well, that would be nice if so. But if not, if things aren't better, if this is just the quiet before the storm, then this is the best value across the board in silver and gold that I have seen in 4 years. We decided to do gold this time. And, you know, we've done silver by and large for the past 3.5 years, almost every single week. Why? Because it still is, independent of the special today, the most undervalued asset on the planet. It still is, in my mind, the value of a generation. And try and poke holes in that on every single metric: supply, demand, its ratio to gold, both geologically and historically. Silver is an opportunity of a generation, and I mean that in my soul. But by the same token, when you see gold revalued tier one and you see gold's significance in all of the talk related to the Brics and the Shanghai Cooperation Organization and the legitimacy that it gives and the acquisition and repatriation by the biggest money in the world, tells me you do not want to count out gold. A lot of people like silver because they wonder what the world will look like when everything goes crazy. So do I. So trading in gold is never a good idea in that environment. You get hit over the head with a baseball bat trying to trade a 1 ounce gold coin in that environment. But the 1/10 ounce gold coin is something that offers great liquidity and great flexibility. If I had my druthers, there are 2 coins that I would buy, or 3 coins, let's say, that I would buy over all else. And if you look at my personal holdings, you'll notice a tremendous amount of 3 gold coins: $20 Liberties, $20 St. Gaudens, 1/10 ounce gold Eagles. Now, I've been doing this for a very long time when nobody wanted any of those coins, and I was able to amass a lot of them. Unfortunately, over the last several years, the numismatic prices have gotten too high, so we focus on American Eagle and Buffalo. With that being said, the 1/10 ounce gold Eagle, the 2023 1/10 ounce gold Eagle, is fantastic, and it's $37.50 over its melt value. It's fantastic because it always carries a premium. It always has carried a premium. In my career, there has never been one coin that has ever exemplified that more than the 10th ounce Eagle. It's made in tiny supply, it has huge demand, and buy or sell, it has big premiums. But what it offers you is the most liquidity with the least subjectivity, because it's clearly marked 1/10 of an ounce. It's brand new. It's 2023. It's just a miniature Eagle. If I had my choice, it's the only type of bullion I would own. But from a standpoint of it being a good value in relation to 1 ounce coin, I can't say that it is. They have high premiums, but everyone should own some. They come in tubes of 50. They're the size of a dime. A roll of dimes, you fit 3 of these in the palm in a closed fist. So you have 15 ounces in each fist. You got 30 ounces, in 1/10 ounce coins, or 300 little dime size coins. Supreme liquidity, supreme flexibility, huge demand, and I think everyone should own some. So a departure from silver, albeit I still believe that it is, if people are looking for the greatest value, it's in silver. If you want some gold, the 1 ounce gold Eagle and Buffalo is a better buy value, but I think everyone should own some 10th ounce Eagles. And that's why we're running that today. $37.50 over its melt value. Take the price of gold, divide it by 10, add $37.50. And there you go. And I love them. And I've been accumulating them for over 30 years. And they are by far my favorite bullion coins. So I think everyone should own some. There's no minimum order. And
Andy Schectman's seasoned expertise illuminates the world of precious metals. With his sharp insights, he highlights the opportune moment for both silver and gold. Silver's undervalued strength and gold's pivotal reevaluation remain at the forefront of his analysis. As you navigate these dynamic markets, remember Andy's counsel. Embrace the adaptability of the 1/10 ounce gold coin. In the ever-shifting landscape of precious metals, Andy's guidance shines as a beacon of knowledge and clarity. If you like our videos, please like and subscribe to this channel. Thank you.